Financial lessons I should have learned in school. Taxes. Welcome to lesson 1 of our financial lessons tax course, where we will discuss tax filing statuses. There are 5 tax filing statuses, and when filing your taxes, you will choose the one that best fits your situation. The first filing status is single. This is an individual that is unmarried and has no dependents. The second is head of household. This is an individual who is also unmarried but has at least one qualifying dependent who they provide over 1/2 of their expenses for. The next status is married filing separately. And this would be a couple who is married but choose to file separately for whatever reason, either because they live separately or because filing separately will give them a greater tax benefit. Next, we have married filing jointly. This is for a married couple who choose to file jointly. And typically married couples will choose this particular status because it generally gives you a greater tax benefit. There are certain deductions that you cannot take if you use the married filing separately status. So most married couples will choose the married filing jointly. However, it doesn't mean that that is the case in all situations. You should work with your tax professional to visualize both ways if you're married to see which way is going to give you the best tax benefit. Next is qualifying widower or widow with a dependent. So, if one of the spouses in a married couple passes away and they have at least one dependent child, then they are able to take this particular filing status for 2 years after the death of the spouse. This particular status gives them a greater tax benefit as it allows them to use the married filing jointly status for their standard deduction and other things. And so they get a greater benefit if they use this particular status up to 2 years after the death of the spouse. After those 2 years have expired, they will have to file as head of household if they remain unmarried, or if the dependent has aged out, then they may go to a single status, or if they've remarried, then of course they would have the option of using either married filing separately or jointly. So, there are several considerations that impact taxes owed. We will be covering the 4 major ones that I see while completing client tax returns here in this particular course. And in this lesson, we are looking at the first, which is the tax filing status. Each filing status has a specific tax bracket, and so it will determine what impacts that individual tax liability. This shows 3 of the tax filing status tax rates and tax brackets, which can be used for calculation of taxes. We will go into more detail on how to calculate your tax liability in our mini lesson up next. However, you can see here that with each filing status, the tax brackets change. On each of them, we have 7 different tax rates that remain the same for each filing status. However, the tax bracket for each one of those is different. So, under head of household, we can see that at the 10% rate, that individual's income from 0 up through $14,650 is taxed at that particular tax rate. Whereas The ceiling for it under married filing separately is $10,275, and for married filing jointly is $20,550. So, this is one of the most important things to remember and take note of while you are working on your taxes or considering what your tax liability is going to be at the end of the tax year. So, in summary, you should verify that your dependent is a qualifying child or relative prior to including them on your tax return, as this will impact your tax liability. And there are 5 tax filing statuses based on your unique circumstance that impact your taxes that will have to be considered prior to completing your tax return. We will talk more about tax filing statuses and how to calculate your tax liability based on your status in our mini lesson coming up next.